Thank you, gentlemen. Ladies and gentlemen, please join me in welcoming the moderator of this session, Mr. Jeremy Malin, who will be taking over from here. He is also the Senior Director and Product Management of Credit One Bank. Thank you.
All right, thank you all. So as you know, she just did the introduction, but on the panel with me, we have Mark Hilton, President and CEO of Alpine Gold, Brent Bahnub, Founder and CEO of Apogee Process Improvement, and Demilade Olaosun. Is that right? All right. Media and entertainment attorney with RBMM Solicitors. He is from Lagos, Nigeria. All right, my name is Jeremy Malin. I'm a Senior Director of Product Management, Customer Experience, and Digital Transformation at Credit One Bank. Again, thank you all for joining me. All right, let's start with some introductions. If you could tell us a bit about yourselves, the companies you're with, and your role, specifically as it pertains to the platformification of banking, the market, and legal compliance challenges faced. Mark, let's start with you.
Okay, thank you, Jeremy. Great to be here. So a little bit about my background. Okay. A little bit about my background. So I'm, like Jeremy, I've been in product management for many years, in technology companies, from entertainment, media, IT. I was an aerospace engineer for about 10 years. And I've been now in the financial services industry for the last several years, applying some of those learnings. So I represent, or I'm running a company called Alpine Gold Exchange. We have a booth out here. I'll briefly describe to you what we do, but I'm sure you're going to forget immediately. So we actually have in the program, right before the awards section, there's a full page description of what we do. But our focus and our mission is about representing and enabling sound money principles. What we mean by sound money is money that doesn't devalue. So there's a number of different types of currencies in our nation. Most of us think of money as this paper stuff that we carry around or we have digitally. But there's also specie legal tender. So specie means gold or silver, basically. And as the Constitution states, you know, that should be the focus of our money. So we've been distributing, acquiring, and providing a platform for the use, the acquisition, use of specie legal tender, gold and silver coins minted by the U.S. Mint. We've also innovated in something called Goldback, which I'll briefly show here, if you can see some of that. We have it in my wallet. These are made of gold. They look like bills, but they're actual made of gold. And so they have actual value, sustainable value, as opposed to the fiat nature of our current currency. So our focus is in that and providing a platform for folks to acquire, hold, use, lease that form of money. I'll stop there.
All right, Demilade.
Yes, my name is Demilade Olaosun. I'm an entertainment lawyer from Nigeria. My firm represents some of the biggest performing and recording artists, movie producers. Matter of fact, we represent the producer of the highest grossing movie in Africa, Omogeto the Saga, Funke Akindele. We've been in business for about 8 years. At the time that we started, entertainment law was not a very known part of the legal practice in Nigeria. What we had were law firms providing intellectual property law services, copyright registration, trademark registration, infringement, lawsuits, and all. But what I wanted to do was provide transaction support services such that from conception of ideas to implementation to execution to activities that come after you've completed transaction execution, I wanted to have a firm that would provide services to practitioners at each level of production. And I'm proud to say that in the past 8 years, we've recorded a lot of success. We've handled equity acquisition in media companies from entities and individuals in the US, in the UK. We've represented animation companies. We've represented fashion houses, record labels, and several other media and entertainment practitioners. Thank you.
Brent?
So I'm Brent Bahnub, CEO and founder of Apogee. Apogee is focused on reducing risk and expense associated with disclosures throughout the financial services industry. As far as disclosures are concerned, we believe that financial services firms generally struggle with what they say, why they say it, and where they say it when it comes to disclosures. So on the why they say it, or on the what they say front, across lines of business, while they should have one disclosure, they have several disclosures. So lines of business are not coordinating their disclosures. Increased disclosure variances leads to increased risk. On the why front, the firms don't link their disclosures to laws, rules, and regulations. So there's not a clear tie between the words you're saying and what is required by law, rule, or reg. And then the where they say it is the disclosures aren't also linked out to customer communication, so you don't know where you're saying the stuff. This leads to confused customers, angry customers, customers that start legal action, start regulatory fines, and all the while you're losing money because you've got this operational inefficiency because you're not reusing the disclosures that you should have made once, right? You're making new ones. So what we do is we go and we rationalize a set of disclosures at Apogee and get it down to one set of disclosures for lines of business and within a line of business. We link them to the laws, rules, and regs so that when the laws, rules, and regs change, you'll know to change your disclosures. And we initiate the logging of the disclosures to the customer-facing communications. So you will reduce your fines, your legal expenses, have happier customers, which is always a good thing, and lower operational expense. So.
Excellent, thanks. So we can break the session here into three components, right? The market, the regulatory landscape, and the legal challenges. Let's start the conversation with the market. As we look at the market, we see the number of platforms proliferating. Going back 10 plus years, this was limited mostly to what we would now call BaaS solutions, banking as a service solutions, core platforms. Anyone working within FIs, financial institutions, could name the handful of vendors that you would choose from. Now, with the rise of fintechs, the broadening of services being offered, we see platforms for everything from payments to mortgage origination to smaller third-party platforms that financial institutions can bolt onto their existing experiences. We do have an international panel here, so let's, so Demilade, what are you seeing regarding the marketplace of platforms within banking, especially from Nigeria, where a lot of the fintechs are starting to head in Africa?
Yes, thankfully, traditional banking organizations in Nigeria may have dropped a couple of balls that made it easy for fintechs to, really come and take hold in Nigeria. What we had in Nigeria prior to 2012, when Nigeria decided to embrace the cashless policy, was just the typical practice of money depositing and money withdrawal. That was strictly what banking operations were about. No innovation, no customer-centered services. It was purely bring your money, we'll keep it for you, and when you want to take it, we'll take a bit of it, and then we pay you the rest. Now, from 2012 downwards, we had innovations come up with different payment platforms coming up to say, you know what, outside of just you, if I deposited money in Nigeria, there are about 36 states. It used to be that if you deposited in Lagos, you would only be able to withdraw in Lagos. If you traveled out of Lagos, carry cash, But with the advent of technology and the ability to deposit in one state and withdraw anywhere in Nigeria, we started having other platforms that came up to say, we can help you with money movement, we help you with credit facility, because for traditional banking institutions, it was impossible. You literally have to submit your dead mother's burial certificate before you could even collect $1,000, you know, as credit facility. Access to loans was almost nil. Now we have payment platforms that now provide advanced credit facility with very minimal collateral or documentation required. We have people that now do payment solutions such that you can make payment on your phones for your electricity bill, for your telephone bills, for all of those things. Nigeria used to be really cash-centered. The entertainment industry is more cash-driven. We have a practice in Nigeria where if a performing artist is singing, for example, and is calling your name, he starts to sing your praise. You know, as he does that, you get excited. You know, you start to, with this kind of clothes, you start to dance, you start to sway, and then you dip your hand in your pocket and you start to spray him. You know, you start to spray him. Now, what that does is that at the end of the day, the profit for the artist that is performing is dependent on what people during the performance spray him. So you'd have a situation sometimes when they may not even pay an advance fee for performance because they know that when performances start, by the time I call you and I say, Mark, you are the greatest man, Mark, you are this, Mark, you are that, you look at me and say, oh, I give you money, then you start to spray me. Now, it was driven by cash. Now, what then happened when some of the policies of the Nigerian government tried to start reducing the cash in circulation was that quite a number of people started losing businesses. It became a case of, do I get to the stage and say, this is my wallet, you can do a transfer as I'm calling your name, you know? So some of this is now, we now got to the point where we're creating new avenues for music performing and recording artists to make money like that. We also have the cryptocurrency, digital assets, fintech startups that came up. However, the Nigerian government, not probably understanding digital assets, then expressed that no depositing bank should accept, you know, digital assets. It became almost illegal to deal in crypto. However, gradually it's beginning to get accepted, and I think that with time, finance and the regulation and the entertainment industry will come from a synergy together.
Excellent. So, go ahead.
Do you mind if I jump? Yeah, that's fascinating in terms of the evolution there in Nigeria. I think we're seeing, you know, obviously we're in the U.S. market. We're based in Utah, so a little bit different than Nigeria. But we're finding, at least the folks who come to us are really interested, or let's say they're concerned about the state of inflation, the state of the fractional reserve system that we have, which can cause some instability in our economic cycles. They're concerned about privacy issues. So there's a market that's been developing of people interested in gold and silver, not just as bullion to hold in a vault, but actually as money. And so it is money. It has been for generations. The challenge we have is we do have gold dollars. You know, they're minted, but there's been a divergence in the value between a gold dollar or a silver dollar that you can get from the U.S. Mint, or something like these gold backs, and fiat currency. Fiat currency has been, you know, devaluing over the years by, in the last, I think 50 years, it's gone down by, you know, 80% or something in its value, whereas gold and silver have not, but they're both dollars. And so it creates some opportunities, some risks, but it's also some opportunities for individuals that are interested in exercising or practicing commerce with gold and silver. There's a whole legal structure around it. It's been developing, which then, of course, drives the need for a platform where this can occur, where you can exchange, you can have a balance. So we're an exchange. We're not a bank, but we do a lot of bank-like things where people can place their money. They can purchase gold, silver. They can exchange it back and forth. We have a zero buy-sell spread, which you'll never see at a coin store. Normally at a coin store, you walk in, and if you buy some gold and then you change your mind, you want to sell it back, you're going to lose 5 to 6% at least. We don't have that up to a certain amount per month. So this is a market that has been developing. It's been fascinating to watch. These gold-backed products were introduced I think about 4 years ago, and they've been growing at, you know, astronomical rates. We can't keep up with the demand. So that's a fascinating market to watch, I think, and maybe to start changing your mind from gold I put in the vault, I stick it in my mattress, I put it in my safe, to this is gold that I can spend. I can use it as money. We're actively developing a network of merchants that will accept these types of products. And we have a whole regulatory kind of structure that we can talk about later of how we were able to do this without onerous regulation at this point. So those are some markets that we're seeing that are fascinating. We do see some international interest. We're seeing other communities, you know, the sovereign nation of the Indians, Ireland, Jamaica have reached out to us, interested in kind of an alternate currency or a parallel currency to their current fiat system where they could use gold-based or gold-denominated currency to stabilize their economy. We also have gold-backed crypto. So for people who love crypto because of the low transaction fees, this is a market that's interesting. Crypto's taken a huge hit this last year. It was just the darling for quite a while now. It's really gone down. But we do offer some gold-backed crypto where we vault 100% of the gold that's backing that, so it really stabilizes the value and becomes kind of a safe haven in the crypto world.
All right, I want to jump onto the regulatory landscape here now. Brent, I want to get your thoughts on this. You know, when we first spoke, you mentioned that you were with a large financial institution. Your directive there was simply fixed disclosures. Right? I think it was the exact words you put it, right? Right. Tell us more about what you were seeing then and what you're seeing now regarding the regulatory landscape.
Sure. So to back up on that story a little bit, the fixed disclosures, and you guys have probably been in this situation. So years ago, I got a phone call or a video call from my boss at the time. About 40,000 people report up to the guy, and he says, "Hey, at the end of this conversation, you're supposed to say thanks for the offer. I accept a new role." So you've maybe found yourself over the course of your career doing that. That was the beginning of my journey with disclosures. But at the time, the company had been fined $360 million for disclosure violation just recently. And believe it or not, it was not that was the impetus for setting this off. It was it was disclosures on a poster in a branch. They were wrong, right? So what we're seeing over the years, so that was, as Jeremy said, I got two words: fixed disclosures. And this is a multi-trillion-dollar bank, and it was, you know, it sends out about $500 million individual communications per month. So it's a tricky world. And what was tricky then, you had somewhere between 15,000 and 20,000 servicing letters. They predominantly have disclosures on them. So the volume that you're dealing with at a large institution is amazing. And it's gotten worse. So I'll give you we all know the benefits of platformification, I hope. That no matter your size, you can have some of the best platforms out there. You can have the best marketing piece for a particular credit card. You could have the best DDA system out there, right? Super. But that ends up with a fragmented industry in financial services. And I think we may talk about this a little bit later, but there becomes a reliance on your firm with these platforms. And your firm, your financial institution, is responsible ultimately for everything they do. The regulator does not care that you used some third party to do it, you're on the hook for it. The fine goes to you. You figure out how you're going to resolve the situation, right? So if you had, and this isn't one of the firms we've worked with yet, but if you're, Bob's Marketing Shop, and which don't use that as a name, probably a bad name, but and Goldman Sachs is using you, when Goldman Sachs gets fined because of Bob's Marketing Shop, it's Goldman Sachs that's going to be on the front page of the Wall Street Journal. It's Goldman Sachs that's going to get the fine. So I think that's what we've really seen over the last years. I think you hit on it, the 800-pound gorillas that we used to have in platforms, the Pfizers, the FISs, the TSISs, right? Now you've got probably 10x what you used to, and that's great on one hand, and on the other hand, it's more risk.
I think there's a branding 2.0 where they'll work on a better name than Bob's Marketing Services. But Mark, I want to go to you here with this because you talk about large, heavily regulated financial institutions. As of yet, and I'll stress the word yet here, you are not in an area that's typically looked at by the regulators and the regulations. How do you see that playing out and what are you watching going forward with that?
Yeah, so we are regulated. Obviously, it's not the wild, wild west. There's people that are interested in our operations. Most notably are the members or the clients, the depositors. So we're answerable to them. Because we have a policy of 100% reserves, unlike the 5 or 10 or whatever percent. So we're structured in a way where we avoid the bank regulations, but we do have other regulatory concerns or things to think about. Obviously, if and we expect it to, this movement continues to grow, then regulation will probably increase, and we will have to be on top of that and be in front of it. So we're monitoring that, certainly by attending shows like this, talking to a lot of different entities. But we're structured as a trust escrow company. So we have a trust structure, so all the assets are held in the state of Utah. That's required to be run by a law firm. So we have a Legal Tender Services is our associated law firm that runs the trust escrow services. We're the operations company that acquires, vaults, and so, I would say people that would regulate us would be our members. So we have an independent association, United Precious Metals Association, that runs an audit 3 times a year. Going? Can you guys hear me? That's all right. I guess if I look, you can hear me all right? Okay, good. So they run a physical audit. They go down into our vault, they count it, they compare that with our asset statement, our balance statements, and they check that off 3 times a year. So that's one thing. Obviously, we're insured by 100% insured, not like FDIC, up to 100,000 or 250. We're insured 100% by Lloyd's of London. And so they can come in and they can audit us and look at what we're doing from a security perspective. And so we have, obviously, the trust law we have to maintain. So that is a key thing that we're looking at. But yeah, so far we've been able to position ourselves. We're not being evaluated, and on a regular basis by bank auditors yet.
And then Demilade, as much as we think regulations are complex here, in Nigeria, from what we were talking about, it is constantly changing. Like, as you mentioned the other day, daily the regulations are changing. Yeah. How are you dealing with that? How are you seeing that play out? If you can answer that quickly.
So Nigerian fintechs and entrepreneurs have always found a way to adapt to the constantly changing regulatory landscape in Nigeria. Recently, the Nigerian government, about last month, suddenly, without any proper policy documentation or policy guide, expressed that it was going to redesign the Naira. Its claim for that was that he wanted to stem the tide of currency counterfeiting. And then because we've had a huge increase in the spate of kidnapping in some parts of the country, and then quite a number of the kidnappers had amassed, a boatload of the currency, in cash. So they wanted to render whatever they had in stock useless. So they said there was going to be a currency redesign. And then 2 weeks ago, they came up with a new policy that expressed that you could not withdraw more than 100,000 naira. Now, for context, 100,000 naira will be about $120 in cash in a week. Now, if for an economy that is largely based on cash, what the business entrepreneurs had done was to find different ways to sidestep the regulation. So, for example, we had businesses where you could walk into a small shop that was selling groceries, and then you'd be able to collect cash, use your card, so you don't have to enter into the banking hall. We had people come up with an idea where if I have a supermarket, rather than carry the cash and take to the bank, I would just give it to people in exchange for their credit cards payment into their accounts. So at every point in time, Nigerian entrepreneurs kept trying to get ahead of regulation, but it is not so. Most of the regulatory issuances by the government have not been so favorable. So we keep having new rules and guidelines and policies. But I can say of Nigerian entrepreneurs that they have a never die spirit, and they've been trying to keep up with regulatory policies.
Yeah, great. So I want to move on to the legal challenges, and we can kind of split the legal challenges into two areas, two categories: contractual and internal control. Right? If we look at internal control, Brent, you mentioned this earlier. What it ultimately comes down to is that it doesn't matter how many third parties you're using or what's in the contract regarding indemnification and anything else. The bank is going to be held responsible. So what can banks do or financial institutions do, to mitigate any future legal challenges? And we can lump compliance in there as well. As well as from a contract standpoint, what can they do to mitigate any risks? Besides indemnification.
So, first of all, you should have the indemnification in there. The point on the indemnification is it's not particularly strong at the end of the day, right? It'll give you, if that's what you're hanging your hat on, you've got a false sense of security, is what it amounts to. So we wanted to leave you with something very practical that you could do in these situations. And where you could change your internal processes is go look at your TPO process, your third-party oversight process. Most people don't have a step in their third-party oversight process or a series of steps to go make sure they're okay with that vendor's disclosures. So don't come up with a new process to go check vendor disclosures. Just take your existing third-party oversight process, add a couple steps around confirming that you're okay with their disclosures. And now I think half of this room is lawyers. I'm not a lawyer, so you guys can, I have lawyers on my team, but I'm not a lawyer. But my understanding is that there is a line you don't want to cross when you're doing that, right? You can't say, I approve the stuff that you have. Basically, you give them a non-objection. So in your TPO process, part of it should be double check those disclosures from your third parties, all of your third parties, and make sure that you're okay with them. If you're not, say something. They don't have to be exactly what you would have, because if you tell them what to write, you're kind of breaking down that thin layer of indemnification. But you can tell them that you don't object.
Anybody else want to add?
Yeah, I was going to say that there is currently a policy by the Nigerian government it's called the Soundbox Operational Framework, that allows fintechs and other platforms like Brent's company that's coming in to say, we'll give you the opportunity to introduce your product into the Nigerian economy, and operate for a couple of months or even years for people to get familiar with your product. So this is the right opportunity. It's the right time for platforms coming from all over the world to come into the Nigerian economy, take advantage of over 200 million population of people to improve the banking system and, of course, make a killing in terms of profit.
All right. And any final thoughts, Mark?
Yeah, so in the area of legal challenges, obviously with gold, we're seeing it mostly comes down to taxes, how you treat this. It's sales tax. Do I have to pay sales tax when I actually acquire the metals? And most states have an exemption for that. If I'm buying money, you would expect not to have to pay a tax. There's also capital gains taxes, so in terms of contracts and such, I would say there's a contract with the government that we actively manage. We lobby, we actually put forth, new laws. So there's a Legal Tender Act that was put in place in Utah in 2011 that one of our principals authored. And now there's about 6 states, I think, that have specific legal tender acts stating that they can receive taxes, state taxes paid in specie, legal tender. So that's an area that we're definitely looking at influencing. Capital gains taxes is the way the IRS determines it. And we call it the inflation tax, because in reality, if I buy metal, I'm not going to lose value in that metal, but over time, the dollar, the US dollar, or the fiat currency is going to lose its value if I convert it back. That's looked at the IRS as a gain, but really it's an inflation tax. So we have some strategies that we work with our members around how to position themselves to avoid that. And then income tax as well. You can pay your income taxes in gold and silver, and there's implications associated with that. And we always say tread lightly in those areas. So we don't specifically advise people in that space, but we have seen a lot of people take advantage of the situation.
Excellent. Thank you all. I think we're at our time here.
Thank you.
I think we'll all be around though for the next couple days. So if you have any questions, feel free to find one of us. Thank you guys.
Thank you.
Thank you.